Decide what currency you want to buy or sell. Make predictions about the economy. For example, if you believe that the Japanese economy will strengthen, which will be good for the Japanese yen, then you will probably want to buy the Japanese yen in exchange for a weaker currency. Read economic reports. Data released regarding a country's GDP, for instance, or reports about other economic variables like employment and inflation will have an impact on the country's currency rate. If a country is having an election, for instance, and the winner of the election has a fiscally responsible agenda, then the country's currency rate will be likely to appreciate. Also, the currency is likely to increase in value if the country government loosens regulations for economic growth. Analyze the market. Fundamental analysis. This involves looking at a country's economic factors and fundamentals and using this information to influence your trading acts. Technical analysis. This includes reviewing historical data or charts to predict, based on past events, how the currency rate will move. You can easily obtain charts from popular platforms like MetaTrader 4.